You're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Here on Opening Bid, we bring you the investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with your money. Let's get a quick look at the major averages as we kick off trading and send it down to our senior reporter, Ali Canal, live from the NASDAQ in Times Square. Ali, the second quarter is coming to a close, and there are a lot of records out there in the market.
A lot of records out there in the market, including the major indices. We have the S&P 500 up about 0.3% shortly after the opening bell. NASDAQ Composite up about 0.5%, and the Dow Jones Industrial Average trading about 200 points higher there. So green across your screen, S&P 500 and NASDAQ Composite, they both hit records on Friday. So if these gains hold, we could potentially see some new records there. And as you were teasing, Brian, we saw some pretty significant moves. We are closing out the first 6 months of the year, and year to date, I just want to call out a few of the big tech performers here. NVIDIA is up about 18%. Same with Microsoft. Meta up 27%. So I was talking about this a little earlier in the show, but we've just seen this performance gap between smaller cap stocks and those larger cap names in the S&P 500 back to their widest point since July 2024. So this is saying that market breadth is a bit narrow right now, so perhaps a bit fragility within this stock rally. But we have seen a bit of diversification. But one reason I think that we're still seeing this momentum chasing for big tech is that we have this FOMO-driven rally, and you don't have to look further than Palantir to really see that. So if you take a look at Palantir, that stock is up over 80% since the start of the year. It's really been the biggest AI play on the street at this point. Remember, Brian, it was a meme stock not that long ago here. So just such impressive growth. So in some ways, this is still very much a stock picker's market, even as the S&P 500 is trading at records, but we will see what the second half of the year brings here.
Yeah, totally normal move in Palantir, Ali. Yeah. All right, let's start with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, FOMO, euphoria melt up. These are just some of the buzzwords investors are using to describe a market poised to end the second quarter on a record-setting hot streak. The bubbly move in stocks has me wondering if the third quarter will be a reality check for the Uber bulls as earnings roll in and a tariff deadline likely comes and goes without a lot of trade deals. Number two, Tesla CEO and former first buddy to President Trump, Elon Musk, is no fan of the one big, beautiful bill, but the market appears to be excited as the bill promises tax cuts and other economic jump starters. So who will be right? And number three, as we are on $4 trillion market cap watch for AI chip darling NVIDIA, I want you to keep this not so fun fact in mind, folks. NVIDIA insiders have sold more than $1 billion of the company's stock in the past 12 months. Red flag? Could be. All right, here to serve up the analysis, Charles Schwab Chief Investment Strategist Liz Ann Saunders, and Yahoo Finance's Ali Canal and Inez Ferre are here as well. Good to see you all on this Monday morning. Liz Ann, I want to start with you. We've been talking all morning long about this FOMO rally, or fear of missing out, this euphoric rally. Are you getting concerned about how fast things are rising, especially over the past 2 weeks?
Yeah, there probably is some complacency that has crept in. It's been an interesting move off the intraday low on April 9th because it's had retail traders' fingerprints all over it, with the different cohorts within the market performing as well as they have, much better than the S&P. Areas like retail favorites or meme stocks, non-profitable tech. So a little bit of that sort of lower quality tilt to what has worked, and that's suggestive of retail traders. That cohort, younger traders kind of born out of the pandemic, have really become the power drivers of this market, but they also tend to have shorter time horizons, but are very much believers in that buy the dip. And frankly, that's been the right MO to have. And what's interesting is they've sort of pulled the institutions along with them in this move off the early April lows.
Lizanne, I love this time of year because you get folks on the street already looking to the year ahead. So I got my first 2026 note in my box this morning, and Morgan Stanley called out the potential for, and their economist team, 7 rate cuts next year. Do you think the market, what we're seeing with this market melt up, are investors positioning for a big year of rate cuts next year?
So I have a bit of I guess, a contrarian take on that. I think part of the reason, if you wanted to point to fundamental reasons why the market has done as well as it has, is actually because the Fed is not cutting interest rates. And that's because the background conditions as it relates to their dual mandate is not suggestive of the Fed needing to move to easier policy. So I think more, that is probably what is sort of baked in, at least right now, to what the market has done. You also have to remember that a scenario under which the Fed is cutting, say, 7 times in 2026, would be a backdrop, yes, perhaps of not much inflation tied to tariffs or otherwise, but probably significant weakening in the labor market. So it's sort of a be careful what you wish for. I'm not sure we wouldn't have to go through a pretty significant digestion phase as it relates to the tie-in between the economy and the market if that forecast of 7 rate cuts next year is accurate.
And as you heard Lizanne talk about that retail trading community out there bidding up stocks like Palantir, like Ali T's at the top of the show, but we're really seeing that in crypto. Bitcoin coming up against 110,000. Circle initiated with a very bullish rating by the team at Bernstein this morning. You're still seeing that move, right?
Yeah, I mean, Bitcoin is up 14% year to date. This token has really outperformed all tokens. In fact, Bitcoin's share of the total crypto asset market is now at 64%. So this really talks to the appetite for Bitcoin, favorable policies. You've got a shift towards a more regulated industry. Earlier this year, you had President Trump signing the executive order for Bitcoin strategic reserve. So certainly it is emerging as the winner among the tokens. And then you have all these companies that are also somewhat related to the crypto, which are also soaring. I mean, you've had Robinhood up more than 100% this year. And you have Coinbase that just closed at record highs last week. Coinbase has had an immense run this year as well.
Ali, nowhere has this FOMO rally played out more, I would argue, than Palantir. I mean, the move there in the second quarter, almost off the charts.
Yeah, and I'm looking at some of the best S&P performers year to date. Palantir is up there, as I was saying earlier, up over 70%. We're also seeing Supermicro Computer up nearly 60%, GE, CVS. So a lot of interesting names here. But for a company like Palantir, that has just sort of been the staple child of this FOMO rally, the staple child of this momentum chasing on the part of retail investors, it's been pretty crazy to just see this run up of the stock. And like Lizanne was saying, we really are in this market that's been dominated by retail traders buying of the dip. We saw that aggressively during the April lows here. And maybe part of that is that they're younger. They don't remember some of these market crashes from the past. Maybe they're looking through a lot of that volatility and just maintaining that mantra that stocks usually go up 100% of the time, every time. But that doesn't mean that we are totally out of the woods when it comes to some of those overhanging risks within this market and a lot of the uncertainty that still lies out there.
If you're out there chasing this momentum rally, hit me up at Brian Sozzi on X. Very curious in what you're trading out there right now. Lizanne, we have to also talk about the one big, beautiful bill. Elon Musk is not a fan. Is there something in this bill, when you talk to investors, that they're excited about that could be good for corporate profits, good for corporate America as we look out over the next few years?
Yeah, so I think the component of it that probably generates the most enthusiasm is the bit of the deregulation component, and that's to the benefit of companies sort of up and down the size spectrum. Of course, the problem is the sheer size of it, and just the CBO data that came out today at over $3 trillion addition here over the next 10 years. And, you know, there's a component of it. The CBO also came out, I think, a couple of weeks ago saying that about 2.8 trillion would be an offset from tariff revenue. And they used the May 13th at that point what tariffs were and then extrapolated out over the 10-year window, which is kind of funny almost that, you know, it's hard to extrapolate tariffs over a 10-minute window, let alone a 10-year window. So it's just, I think it just adds to the attention on the cost of this bill. That said, not having a bill, meaning you get the 2017 tax cuts expire, that would be a huge hit to the economy. And I think that's in focus, obviously, as well.
Ali, I want to go over to you. One stock that is trading as if there will be no hits to the economy, that's NVIDIA. We haven't even really talked about this name this morning. Hasn't risen as much as Palantir, but this NVIDIA move, as I mentioned at the top of the show, comes at a time where over the past 12 months, NVIDIA insiders, including Jensen Huang, CEO and founder, have sold $1 billion in stock. I always thought that would be a red flag, but the market says no.
Yeah, markets clearly don't care about that. Look, you don't want to bet against NVIDIA. I remember when this stock was trading around 80, 90 bucks a share, there was some hesitancy about Blackwell demand, how much we really could see these hyperscalers dig their heels in. But after that strong earnings season, there was just this collective sigh of relief, and we've all turned bullish on NVIDIA again. I'm sure there's many out there that maintained that bullish optimism even during some of these setbacks. But look, shareholders are firm in this company. They want to stay the course here. And you're looking at a year-to-date gains of around 17%. So I think earnings for this company in particular, they are crucial. If we see any signs of demand weakness, that's when you see investors get a little jittery. So I'm looking ahead to those second quarter earnings results to see what NVIDIA is saying about the sheer demand picture out there for AI.
Liz, and of course, NVIDIA, a key member of that Mag 7 component that retail investors absolutely love. But what's the message, do you think, from the rally broadening out a bit from those Mag 7 names into other areas of the market? Are there any red flags in your view regarding the Mag 7 trade from that move?
Well, you're right. There's a lot of dispersion in the Magnificent Seven, at least as of mid last week. I haven't looked at it as of the end of the week. You had 4 of the stocks underperforming the S&P, only 3 of the stocks outperforming the S&P in a pretty wide spread. And when you have sectors like industrials and utilities being on the leaderboard this year, top of the leaderboard this year, it's kind of pseudo AI plays given the power generation side of things. All else equal, I think it's a positive thing that we maybe are not looking at a market that is as uber concentrated as it was in the past couple of years in cohorts like that. There still is that AI related theme, but it's filtering into areas that are not the sort of direct infrastructure plays. And I think that is reflective of the way we're thinking of AI now, more than just sort of that core group, but who are the best utilizers of AI? What is the power needs associated with AI over the longer term? So again, all else equal, I think it's a positive.
All right, let's fire up our stock of the day. It is Disney. Jefferies analyst James Heaney upgraded Disney to buy from hold and raised its price target to $144 a share. I have more on this upgrade now on the Yahoo Finance homepage, but I do want to get over to Ali for some thoughts on why the stock got upgraded.
Yeah, stock is up over 10% year to date. We're trading near the high end of that 52-week range. And Jefferies cited 4 key catalysts, one being parks and cruise business resilience. There's a lot of hesitancy about the macro environment if we could see that consumer slowdown. But we've seen the parks business largely hold up, and the cruise business has just been crushing it. He also cited direct-to-consumer margin expansion. So the company is expected to achieve improved profitability in its direct-to-consumer segment. That includes Disney Plus as a result of various cost-saving initiatives. And then we have the promising film slate. Disney's upcoming film releases are projected to perform well at the box office, potentially driving some additional revenue there. And then finally, valuation appeal. With Disney stock now trading at this attractive level, Jefferies sees potential for a significant upside move. So we'll see if investors can really get behind this company.
And we, of course, are still waiting. Who succeeds Bob Iger? All right, a big thank you to Ali Canal, Inez Ferre, and Liz Ann Saunders for joining me this morning on Opening Bid. On the other side of the break, Microsoft has had a new breakthrough on the AI healthcare front. I'll bring you a very special chat with Microsoft AI CEO Mustafa Sullivan straight ahead. Use of artificial intelligence is sweeping the world as technologies like ChatGPT become part of our everyday lexicon. And Microsoft thinks its AI could end up in your doctor's office. The Microsoft AI team is investigating how AI can help diagnose medical cases. A new study from the team today shows the firm's diagnostic orchestrator, which uses OpenAI technology, can correctly diagnose up to 85% of case proceedings in the New England Journal of Medicine. This is a rate more than 4 times higher than a group of experienced physicians, and it's more cost effective, according to the findings. Joining me now is Mustafa Sullivan, CEO of Microsoft AI. Good to see you, Mustafa, a longtime follower of your work. So let's start on the news here today. How will this breakthrough, how will this help the healthcare system moving forward?
Well, the incredible thing is that we at Microsoft AI already have 50 million health-related queries per day coming through Copilot and Bing. And our goal is to try and provide the most high quality, most accurate, and ultimately the cheapest health advice and support to all of our consumers and to many more in the future. So although this is just early research, we're hoping that as we get this into production, it will give everybody access to very high quality health information.
The first thing I thought of, Mustafa, when I saw this, why do I need my physician? And does the physician over time go away because of these advances in AI?
No, you definitely still need your physician. Your physician is going to be there to make the right judgment call at the right time, to plan the treatment that often comes right after the diagnosis, and essentially to oversee and organize and hold the AI itself accountable. Essentially, what these models are doing is that they're looking at the vast array of existing medical information, synthesizing it and presenting it back to the human at the right time. This is an amazing interactive experience. AIs are now actually asking questions of the data themselves, recommending what tests to get, and then iteratively, sequentially improving the accuracy of its diagnosis as it learns more information. And so doing that in partnership with physicians, themselves is clearly going to be the way that this gets rolled out, I think.
How are physicians getting trained in AI?
Well, I mean, today, you have to pass the US MLE, the medical licensing exam, and you need to get about 60% on multiple choice questions. These models get upwards of 95% accuracy on those questions. But the really unique thing about this model is it doesn't just use one AI, it actually uses all four of the big major AI developers and essentially goes to whichever one is most accurate at any given time. And that's what the function of an orchestrator is. It decides when to use a big model or a small model, or when to use lots of thinking time or a little. And it is able to kind of get a much more accurate answer by taking the best of all possible models.
In many cases, healthcare decisions deal with life or death, Mustafa. How do you build trust in this technology?
Well, the cool thing about this method is that you can actually see why the AI is coming to a particular conclusion. And as you add more data, it updates its best estimate of what the diagnosis is likely to be. And so that gives a lot of transparency around how it's thinking, what data it factored in, which tests it does. So this is actually an unprecedented amount of transparency, which of course is key to trust, because you can actually go back and look at the entire conversation that took place between many different agents that are all coordinating with one another to debate on what the most likely diagnosis is going to be. And that, I think, ultimately is the best way to improve trust.
Early this year, Mustafa, I had a chance to talk to Microsoft co-founder Bill Gates. He gave your book, The Coming Wave, a shout out. Compared to when you wrote that book a couple of years ago and today, just given how fast things are moving in AI, are you more or less concerned about the power of AI and risks associated with it?
I think I would say I'm about the same. I think that progress has been phenomenal and things are getting better and better. The models are getting much, much smarter. But I just couldn't be more excited about that, because this is the dream of having models that can help humanity solve our biggest challenges. I think we're going to see the greatest productivity boom in the next 10 years we've ever seen, because after all, intelligence is the thing that invented all the tools and technologies that has improved civilization for many, many centuries now. And we're now about to make that a cheap and abundant resource that everybody can use to invent and be entrepreneurial. And it's not that there aren't risks, it's just that the opportunity is absolutely enormous for everybody. And that's how we should measure technology. Does it always improve the human condition? Does it always elevate humanity and make us smarter and more productive and safer? And that's the test that we should hold it to. So that's why I'm so excited about, the steps that we're taking here towards medical superintelligence. Imagine having the absolute most perfect medical diagnostic superintelligence in your pocket at any given moment. That's the kind of AI that I'm sort of really pursuing, I'm most excited about.
And Mustafa, it's within this research, you did mention that it was utilizing OpenAI's O3 model. And of course, Microsoft and OpenAI have had a really strong relationship since 2019, but reportedly that relationship has begun to fray a bit. From your perch, what is the status of your relationship? I mean, Microsoft has invested, close to $14 billion in OpenAI?
I think the relationship's in pretty good shape. I mean, OpenAI is an incredible company. They're on an explosive path to growth. And, they're their own company doing their own thing. And we've had an amazing relationship for 5 years, and it will continue for at least another 5 years and hopefully many decades after that. So I think it will go down in history as one of the best technology partnerships that there has been. And so, naturally, that's always going to require constant iteration and evolution. So I think it's in great shape.
Are you close to resolving any differences?
Absolutely. I mean, I think it's been an ongoing discussion for a long time now, upwards of 6 months or so, and it's a very complicated contract and, lots of tweaks need to be made. But fundamentally, these are two companies in a great alliance, and I think that's definitely going to continue.
As someone that has been on the ground floor of AI, such as yourself, of course, co-founded DeepMind many years ago, does the switch to for-profit for a company like OpenAI, does that add more risks to society over time as their technology gets even stronger?
Look, I think the good thing about OpenAI and my previous company Inflection, as well as Anthropic, and a lot of efforts that we made at DeepMind, is that all of us founders of these AI companies have started out with asking the question, what is the public benefit? How does this serve humanity? And we've tried to experiment with different legal structures to do that, different incentives for the company itself. But we've definitely put these issues of the ethics and safety of these applications right on the table, front and center, for the last 15 years. And I know that whatever structure OpenAI takes, the team there is going to continue to do that.
And this comes, of course, really the competition for top AI talent is through the roof. I haven't seen something like this before in my time covering the space, Mustafa. Now, Mark Zuckerberg is reportedly willing to hand $100 million paychecks to get the talent he needs. Are you willing to do that in Microsoft to get the talent you need to keep making breakthroughs?
Look, I think the incredible thing about this technology is that it's also widely available in open source, and a lot of the knowledge and know-how is proliferating faster than any other technology in human history. So I wouldn't over-index on, the rumors around the state of play in the labor market today. And I think in actual fact, there's going to be a huge, huge talent pool as everybody adopts this technology over the next few years.
And lastly, we're still thinking back this year to DeepSeek and its impact on AI and the broader stock market. As you look forward, how far is China in the AI race versus the US, or are they not ahead?
No, you've got to take them very seriously. They've always been a very talented group of researchers. They've found their way around getting access to computation. They probably have slightly looser controls when it comes to accessing data, which always frustrates me. But we take them very seriously as a very credible AI development team.
All right, we'll leave it there. Good to see that research out this morning and what you're doing in the healthcare space. Microsoft AI CEO Mustafa Sullivan. We'll talk to you soon.
Thank you. Good to see you.
Appreciate it. All right, coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. You won't want to miss it.